to lesson 10 of AMC for component 3. This is the third lesson out of 4 on sources of finance. This one focuses on external sources of finance. This is actually the last lesson on learning new information. The final lesson is actually a mini assessment. There's a present for you all. Bruce, you've actually made it to the end of component 3. Well done. You should rejoice and celebrate. This is the last piece of learning for AMC. This is about sources of finance. We're continuing with the same learning intention about understanding different sources of finance. Now we're focusing on external. So we need to know the different long-term external sources, evaluate them, and be able to recommend sources of finance to improve a company's cash flow. The vocabulary today will be leasing, venture capital, peer-to-peer funding and hire purchase. So to make sure you've completed the lesson, we need to have 6 sources of external finances, describing the benefits and disadvantages of each, and being able to recommend, as it says in the pink box, sources of finance to improve cash flow. Some far out careers at the bottom. We've got post office customer service assistant, that's rocking the boat there, trading desk analyst and for the local government, and a local government performance officer. So straight in with task 1. This is about loans, leases, grants and venture capital. Let's see what you can work out right at the beginning. Long-term sources of finance are debts that are repaid over a long period of time, like you would imagine, often more than a year. Long-term sources of finance include the 6 items in the boxes below. Your job is to move the definitions to the correct titles in the table. So all the definitions are written in text boxes, and it's your job to match up the right definition to the title. So if you do this on the screen, then you just grab the text box and you move it to the right row. If you're doing it in your books, then you write down the table and then you select the text in order to write it in the right hand side. Answers will be revealed as we go through the lesson. External sources of finance, long-term ones. External sources of finance come from outside an enterprise. Long-term sources of finance are usually paid back by the enterprise a lot longer than 1 year of trading, and therefore tend to be expensive as interest rates are applied. Here we've got 2, bank loans and leasing. A bank loan is an agreed amount of money that will be paid back over a period of time. This might be anywhere between 1 and 10 years. Interest is paid on the loan, which is added to the monthly repayments. Owners of an enterprise will need to apply to a bank for a loan, show evidence that their business will be successful, and prove that they can repay the loan. Leasing. This enables a business to use expensive assets such as machinery and other equipment without having to buy them. It works like this. A business borrows the equipment it needs from the company that owns it. The business makes regular payments to them. The business returns the equipment to the company when it has finished with it. The company that lends the equipment remains the owner of it. Here's 2 more. That's external sources of finance, which are long-term ones, not 2 more piggies. So let's have a look at them. Hire purchase is an agreement that allows a business to purchase equipment such as machinery from a supplier without having to pay the whole cost up front. The business pays for the equipment in instalments, an agreed amount of money each month. When the purchaser, the enterprise, has paid all the money owed, the equipment belongs to them. It now has a company asset. Government grants. Grants from local or national governments are incentives to support the growth and development of enterprises that have a positive impact on the economy. Some are only available in certain areas of the UK. Government grants to businesses can take a number of forms. Grants might be available to enterprises that provide a social benefit, create jobs in high unemployment areas, have a positive environmental impact. Yep, you've seen it. This is a task 1 redo. We've covered 4 of the external sources of finance. Let's see if your answers were the same or whether you want to have a second go at them, and that should leave you two definitions left about venture capital and peer-to-peer lending, and then that will be a 50-50 chance whether we can get those right. Bank loans are an agreed amount of money that we pay back over a period of time. Enterprise leasing is where a business can use expensive assets without having to buy them. Hire purchase is when a business pays in monthly instalments, not upfront, but owns the equipment when all paid. Government grants are incentives offered to businesses to support growth and development, of particularly when the enterprise can offer a positive impact on the economy. That leaves two left: crowdfunding and a person offering money for a business but for a share of the profits and sometimes decisions. And your final two types of external sources of finance are venture capital and peer-to-peer lending. So see if you can get those two right with only two left. And yes, we'll double check the answers as we go through the lesson. Task 2. Saeed Mustak is a timber merchant. He operates as a sole trader from a yard in Birmingham. Most of his sales are credit sales to builders in the area, but some customers pay in cash. In March 2017, one of his larger customers went out of business, leaving him with a bad debt of £2,200. As a result, he is likely to have problems paying day-to-day expenses. For example, he needs £4,000 immediately or he will run low on timber stocks. Saeed identifies three possible sources of finance. Your job, using the examples from the lesson so far, is to explain the factors Saeed should consider before deciding which option to take. Option 1. Saeed's bank agrees to extend his overdraft to £2,500 at a rate of 13% APR. You need to tell him the advantages, the disadvantages, and then your recommendation. So you are going back over what we've done in the lesson and you are putting it together in terms of a recommendation and advice to Saeed. Option 2. The bank also offers Saeed a loan of £5,000 over a 3-year period at a rate of 9% APR. You need to tell Saeed the advantages and disadvantages because he's got to compare this now to the overdraft, and you give him a recommendation about the 3-year loan that he's been offered. Option 3. A new timber supplier has offered Saeed favourable credit terms but has insisted the first 3 months' purchases be made in cash. So you need to discuss the advantages and disadvantages and recommend whether this is the right option for Saeed compared to the loan and the overdraft. External sources of finance, two more, in fact probably the last two. We've got venture capital and peer-to-peer lending. So this is where you can check your answers from earlier on slide 6. Venture capital. A venture capitalist is an individual or enterprise that seeks to invest in new business ventures. The venture capitalist will offer capital for an agreed percentage return on their investment and share of the enterprise's profits. A venture capitalist may also have conditions over the control of the enterprise, such as a say in business decisions. That's why there are very familiar chairs below. Do you remember where the chairs are from? A very famous TV show that's very much about your component 2 as well, what you need to do when you go into that den. Peer-to-peer lending. This gives the general public and enterprises an opportunity to invest in business startups through an online portal. You can get lots of crowdfunding websites that help the general public do this. Advantages and disadvantages of long-term external sources of finance. This is a revision of lesson 9 and what we've done so far on lesson 10. Your job on task 3 is to go back over and summarise all the good points and bad points, all the advantages and disadvantages of the 6 long-term external sources that we've covered so far. What you have completed in Lesson 10. Definitions of long-term external sources of finance, a sole trader borrowing for Saeed case study, and advantages and disadvantages of external sources, a revision table. That'll do, pig, that'll do. We're done.